the typical groups, the typical funds, the home office accounts and stuff like that that trade gold futures, they're already long. And the short side has been reduced heavily. And so there's just not a lot of buying pressure, new buyers and stuff to follow through and keep chasing price higher. And so that's kind of why and that's, I guess, to me, that's a real world application of that COT report, which you can't really use to trade, but you can use if you understand where price was and can correlate that with COT positioning, and then you can kind of begin to anticipate what might happen next.
In today's news recap, Chinese silver demand surges. Is this a calculated move? Gold demand in China has been strong this year, reflecting a broader movement of the yellow metal from the west to the east. But the Chinese aren't just accumulating gold. They have also been hoarding silver in recent months. The Shanghai Metals Exchange has reported a significant surge in silver volume, with prices consistently higher than Western exchanges. The price premium in China compared to the West has been as high as 10%. This signals an extremely strong demand for silver in China. Chinese silver imports have also surged, hitting a 3-year high of 390 tons last December. In June and July this year, imports broke through the 400-ton level. A year ago, import levels were half that, averaging in the 200-ton range. Last year, China held the second largest silver reserves in the world, trailing only Peru. Chinese reserves were reported at 71,000 tons. Peru, a major silver producer, had a silver stockpile of 98,000 tons. U.S. silver reserves were 23,000 tons, ranking 7th globally. If the Chinese can push the silver price higher, it could have major implications for the West, the Post reported. If the price of silver continues to rise, it could increase production costs for a wide range of industries, from electronics to solar panels. This could lead to higher consumer prices and a further slowdown of economic growth as China outproduces the West in electronics and solar panels. However, there is some indication the growth in Chinese solar panel production could go beyond market-driven demand. According to a recent Bloomberg report, the Chinese are producing solar panels at an excessive clip. There is some speculation that the Chinese are engaging in some low-level economic warfare, hoping to put the squeeze on Western economies. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
And he said, look, China is flying all around Latin America, and they are paying way more than the West will pay for unrefined silver in concentrate and doré form, and then shipping it back and refining it there. Well, that doesn't come off of an exchange. That is, and China's the largest producer of silver in the world, and they've just became a second largest producer of silver, largest of gold, but they just became, over the last few months, a net importer. These countries are viewing commodities the way we've been talking about, the way that they would, and that the way that they are, and the West doesn't tell anyone, and so no one understands how significant this really is. But if it were so archaic, if it were so underperforming, then and I keep coming back to Ed Steer's graph, that he showed, where 8 banks hold the largest concentrated short position in silver of any commodity ever traded in COMEX history. Why? Silver is more important than the West is leading on to, and that is why you see China flying around the world buying unrefined silver and shipping it back. That's why you see India buying 700-800 thousand metric tons over the last 3-4 years. This is a situation where silver and gold are far more valuable than the currencies that purchase it. Much of the world understands this. We don't, and to try and play games and try and bottom feed and get lucky, it's not something that I think will go over very well, especially with such a small participation of the U.S. public. If gold and silver are doing what they have been doing, let's forget about silver because it's been held down. But look at gold, and silver will surpass gold in percentage terms, I believe, before it's all said and done. But if gold is doing what it's doing with positive real yield, Forget about the nonsense out of the BLS and all that stuff. But a positive real yield, a strong dollar, and waning participation by the West. What happens when that changes? What happens now that we're pivoting and we're going to lower rates and we're going to weaken the dollar and we're going to reignite inflation? And, does the public wake up to this and start buying? It's rocket fuel. But much of what we see in the metals market is illusionary, unfortunately, because it's the antithesis of the system that has been allowed to rise unabated versus gold and silver, which have been stepped on. And although they continue to move, I would argue stepped on to the point where they have not been allowed to fully express themselves to their real potential. Even gold, which has outpaced the S&P 500, and doubled the performance of the 10-year Treasury. Gold's 9.9% per year. It's up 20% this year. It's beating the tech industry. Where the hell is the mainstream media?
Going back the first of the year, it had just gotten so crazy by the end of December about how there were going to be 7 rate cuts, and all this jazz. And the bond market had been rallying and the dollar was falling. And if you remember, gold tried to break out on the 1st of December, and then it got a manufactured rug pull on Sunday night, whatever that was, the 3rd, into Monday, the 4th. And that kind of stalled the breakout for about 90 days. And then but we didn't know that, that the breakout was coming. And the first of the year, it was like, most everybody knew there weren't going to be 7 rate cuts. The Fed was telling you, they've been slow walking this stuff for a long time. It wouldn't be more than 2 or 3. So you knew that had to get worked out. As it got worked out, the dollar rallied, 5 or 6%. The yield on the 10-year note went up, 50, 60 basis points. And you'd have thought, oh, wow, man, they're going to beat the snot out of the precious metals in the first quarter. And the opposite happens. I know we've talked for the last couple of years. I know I've included it in my, just from, good feelings, some good publicity. People think they're missing out, and so a whole bunch of new money rushes in. And that's why I always thought gold might go to 2,300. Well, and here we are, 25 something. And have maintained and have broken out since, even a little further of, then we go into this 3.5 month range. Now we've broken out of that. So it is really almost kind of counterintuitive what has taken place. And it leaves old time analysts such as myself, kind of wonder, okay, what do we get wrong? What am I missing here? And I'm not sure I have those answers at this point. But I'm not arguing with 25, $50 gold, 25.50. That feels pretty good.
In today's news recap, can Fed rate cut expectations sustain silver's uptrend? Silver prices rose, buoyed by growing expectations that the Federal Reserve may initiate interest rate cuts as early as next month. This optimism, coupled with ongoing geopolitical tensions in the Middle East, helped lift silver despite a stronger U.S. dollar. Investors also remained focused on a slew of U.S. economic data set for release this week. Silver's upward movement on Thursday was primarily driven by weaker U.S. Treasury yields and increasing speculation that the Federal Reserve will cut interest rates soon. In addition to Fed rate cut speculation, traders are closely watching several key U.S. economic data releases, initial jobless claims, and second quarter gross domestic product figures, followed by pending home sales data later in the day. These indicators will be scrutinized for further clues on the state of the U.S. economy and the likelihood of the Fed easing monetary policy. However, concerns over weak Chinese demand for silver continue to linger in the background. China is a significant consumer of silver, particularly in industrial applications. Sluggish demand from China could potentially weigh on silver prices in the long term, even as investors focus on U.S. economic data and Fed policy. The recent softness in Chinese economic data has raised concerns about the sustainability of silver's current price levels. The release of the PCE price index on Friday is particularly critical, although analysts doubt it will significantly alter market expectations for the Fed's policy direction unless it deviates substantially from forecasts. it remains a crucial data point for traders. Looking ahead, silver appears resilient, especially in a low interest rate environment where it becomes more attractive as a non-yielding asset. However, the metal could face short-term pressure if upcoming economic data dampens expectations for a rate cut. Additionally, persistent concerns over weak demand from China may cap gains in the longer term, especially if the Chinese economy continues to struggle. Despite the dollar's recent gains, which typically weigh on silver, the prospect of lower U.S. interest rates has kept investor sentiment positive. Now we'll show you the best clips of the latest interview, but first, subscribe, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Are in place, 10 or 11. They control a lot of commodities, hard assets, energy, and the other countries that want to join the same. They're mostly in Asia and Africa. And what that means is that it's not going to be as easy for the West to control commodities and commodities prices, and we're going to have to pay more for it. I think it's the ex-guy from Credit Suisse. I forgot his name. He's got a Hungarian name, but he said that there's like a war now for commodities, and BRICS they're gonna control the commodities and hard assets. So unless the U.S. And the West, let's say Europe, allow their economies to develop and to exploit for commodities, which is something that doesn't look like they want to do with this Green New Deal and green agenda, and they seem to not want to allow for extraction of minerals. Things are going to get a lot worse, I think. And the other thing is, if our currencies are not, let's say, if countries around the world don't buy as many treasuries or as many gilts in the UK or European government bonds, that means that unless the central banks start QE and buying these bonds, interest rates are going to be higher than they normally would have been, and that's going to hurt our economies. And I know interest rates have been going down, but I think they probably would have gone down even more if we weren't having so much trouble in the world with sanctions, with BRICS, because if we're cooperating with the rest of the world, they wouldn't have a reason to start a BRICS block or anything. They'd be cooperating with us. So that's why it will hurt us, in my opinion. And it looks like, we forget that the West is a small part of the world population and the resources now, and their economies are growing faster and faster, and they have better demographics than we do. And free markets and freedom of the individual, but it's something that has been chipped away at in the West. Actually, you've seen what's happened here in the UK with the riots and how they've cracked down on what they call far-right thugs, even though they're just people who are most of them were just protesting about policies. And in the U.S. as well, we're seeing that we saw recently, is it Mark Zuckerberg, CEO of Meta, admitting that the government, the Biden administration asked the company to censor people. So, and I think the BRICS nations, we are told in the West that they're authoritarian. They don't have strong democratic principles. But we've been in the West for the last 25, 30 years interfering and trying to bring democracy to these countries. And all we have done is destabilize it. And I think these countries, they think we are hypocritical, and I can understand why they say that. You just have to look at what happened in Iraq in 2003. We went in there and based on on a lie, really, about the weapons of mass destruction. And then we destabilized other countries like Libya. And there's so many of them, Panama as well. The U.S. has been interfering as well in elections since the 50s. So I think these people are saying, yes, we might not have the same institutions as you, but you have to respect us. And even if I don't agree with the way China's run, I think they run their own house. And I think that's what, and I think these countries have strengthened economically so much in the last 20 years that now they have the wherewithal to stand up to the West. And I'm not taking sides here. I'm just telling you.
What do you think of Mario's take? Do you agree with him? Will the US dollar survive the upcoming recession? Are gold and silver not as valuable as some commentators wants us to believe? Post in the comment section down below your honest opinion and share with the stackers your insights. Thanks for watching. Subscribe if you have not yet done so, and check this video right here because it's a perfect fit for you. I'll see you on the other side.